We've got like 5 minutes left, so I want to get your take on get your crystal ball and and get your take from your perspective of this whole industry and what you're in your role in it. What does the future look like 5 years from now and 25 years from now? You'll probably look the same, by the way. I think you're.
Yeah. I appreciate that. I got recently asked by somebody, somebody asked me, I was in a meeting with a congressman from Georgia, and he asked me how old I was, and he seemed genuinely surprised by my answer. I'm 31, by the way. But that was very flattering. Anyway, so 5 years from now, I think that insurance will have proliferated, and with that, we expect additional types of funding sources to come in. We at Shorter have started partnering with various private credit funds or other lease financing companies to actually start bringing them in and getting them comfortable with this category of risk, and we've essentially sort of provided them sort of a benchmark on which they can anchor how to price their loans, right? Because an insurance premium, if you think about it, they're actually underwriting against the same sort of thing. They're underwriting against the asset failing and being worthless. So we think that in 5 years, the market will significantly grow. We actually produced a report very recently that has not been published, so I can't cite the specific numbers, but it was a theoretical exercise of, if we took, for example, the marine or the aviation markets as comparables, right? So aircraft manufacturing, shipbuilding, and there's a significant amount of leverage and debt in those industries, and obviously there's significant insurance proliferation. If we took similar ratios of debt to cash investment, as well as debt to insurance in terms of insurable premium base, and then we applied that back to figure out what would the theoretical size of the space economy be if there was a lot more insurance available and therefore a lot more debt available. We noticed some very, very interesting things. One, independently arrived, the numbers actually line up quite well. There are certain ratios, you could even call them golden ratios, in terms of how all these different numbers relate to each other. And so based on those ratios, we would estimate that the space economy would more than double if there was sufficient insurance proliferation, which led to an injection of debt. The space economy would more than double. And to put a specific sort of to put a specific number on it, is roughly $10 billion worth of debt translates to about $100 billion worth of additional economic value as a whole. And so that's the SOAR ratio. It's a 1 to 10 leverage.
Okay.
So
that's cool.
You then draw that out to 25 years, right? As more types of applications come online, as new types of technologies get matured in space and so on and so forth. And honestly, I think that the growth will compound even further. If you think about how shipping was 300 years ago versus where it is today, I think a lot of people, you think of like London as a financial hub, but it really started with Lloyd's, and Lloyd's gave the security for the rest of the London financial market to really sort of stand up and bloom. And it was, I mean, what were they betting on to begin with? They were betting on maritime trade, right? And so you take that as a historical analogy and you apply that to space. I think we're just getting started.
Okay.